Today on Real Estate Backstage, purchase mortgage applications rise for the fourth week in a row. The November jobs report comes in strong. A Texas court has issued a preliminary injunction against the Corporate Transparency Act. As expected, the appeals are rolling in against the NAR settlement. And finally, Rocket Mortgage has sued the Department of Housing and Urban Development. Now, before we jump in, if you're watching this on YouTube or if you're listening on Apple Podcast or Spotify, take a moment, subscribe to the show. That way you don't miss any future episodes. And if you want to find the show notes with links to any of the articles that we discussed today, you can find the show notes at realestatebackstage.com/episode 8. Now, real quick, I want to give you guys some advice. It's December. It's the time of year where things are typically a little bit slower, and this is the time of year that I like to knock out my continuing education requirements. I typically recommend doing this during the winter before things start to pick back up again with alacrity in the spring. So if you're looking for some discount codes, if you want to take your continuing education online, you can head on over to bluefieldgroup.theceshop.com. We've got a special landing page with them with some unique discount codes. So I would encourage you guys to check that out. All right, let's go ahead and dive into purchase mortgage demand. I want to start with this article from the Mortgage Bankers Association. According to the MBA, quote, the Market Composite Index, a measure of mortgage loan application volume, increased 2.8% on a seasonally adjusted basis from 1 week earlier. On an unadjusted basis, the index decreased 30% compared to the previous week. That, of course, is due to the Thanksgiving holiday. The refinance index specifically decreased 1% from the previous week and was 7% lower than the same week 1 year ago. This is the big part, though. The seasonally adjusted purchase index increased 6% from 1 week earlier. Mortgage rates fell to their lowest level in over a month last week, with the 30-year fixed rate decreasing to 6.69%, said Joel Kahn, MBA's vice president and deputy chief economist. The recent strength in purchase activity continues, supported by lower rates and higher inventory levels, which are giving prospective buyers more options compared to earlier in the year. The purchase index increased for the fourth straight week to its highest level since January of 2024, unquote. So that's really good news. We're seeing some sustained demand for purchase mortgage applications even in November and heading into December. Hopefully we will see a continuation of that trend. Now, also this week, we've got the November job growth numbers, and this is a big recovery from the October slowdown. You guys remember last month in October, we just had an abysmal, very, very low jobs report. But this is according to the Wall Street Journal. The labor market bounced back last month as workers sidelined by storms got back on the job, and as thousands of striking Boeing employees returned to work. The U.S. added a seasonally adjusted 227,000 jobs in November. The Labor Department reported Friday solid jobs growth that was roughly in line with expectations. Stock futures edged higher after the release. The unemployment rate, which is based on a separate survey from the job figures and which tends to be less affected by weather and strike activity, rose to 4.2% from 4.1%. The October job count was depressed by Hurricanes Helene and Milton, which forced many businesses across the Southeast to temporarily close during the pay period that the Labor Department based its job numbers on. The Boeing strike ended on November 5th, early enough for 33,000 returning workers to get counted in Friday's report. Economists polled by the Wall Street Journal had expected Friday's report to show a gain of 214,000 jobs. Last month, the November jobs figure provides something of relief, confirming that October's softening was the result of storm and strike-related distortions rather than a more fundamental weakening. The general picture is that the labor market has slowed but is still doing well. Despite the bounce back in jobs, Federal Reserve policymakers still appear likely to cut interest rates again when they meet later this month. That said, Friday's report does make it easier for them to leave rates on hold if the Labor Department's November inflation report, due out next Wednesday, comes in warmer than they would like, unquote. In addition to more solid numbers in November, we also saw some positive revisions to both the September and the October numbers as well. So according to Connect CRE, quote, September was revised up by 32,000 to plus 255,000 jobs, and the change for October was revised up by 24,000 to plus 36,000 jobs. With these revisions, employment in September and October combined is 56,000 higher than previously reported, unquote. So this is some really positive economic data. Keep in mind, this is what the Federal Reserve is looking at. The Fed is watching the incoming data when they're making their decisions. Now, we have one more meeting before the end of the year, and I personally still think it's very likely that the Fed will do another quarter point cut to finish out the year. But if the economy stays solid, if we keep getting good economic data, we might not see the full point of a cut over the course of 2025 that we were previously expecting. All right, so meanwhile, we've got some good news for those of you who have LLCs or other private corporate entities set up and you have not yet filed your BOI, the Beneficial Ownership Information Report, which is required under the Corporate Transparency Act. If you're a real estate agent and you get your commissions payable from your broker to an LLC and you have not yet filed the report, this is some good news for you. So according to an email from Matt Troiani, who is the Senior Counsel and Director of Legal Affairs at the National Association of Realtors, quote, on December 3rd, 2024, the U.S. District Court for the Eastern District of Texas issued a nationwide preliminary injunction enjoining the federal government from enforcing the Corporate Transparency Act. This means the Financial Crimes Enforcement Network, or FinCEN, as part of the Treasury Department, cannot currently enforce the Beneficial Ownership Information Reporting Rule enacted pursuant to the CTA. The lawsuit asserted that the CTA is outside of Congress's power to regulate under the Commerce Clause and is therefore unconstitutional. NAR is reviewing the court order. Litigation continues, and it is possible the federal government will appeal the preliminary injunction. NAR recommends that members consult legal counsel for legal advice regarding compliance and the implications of the preliminary injunction on their business. As of this writing, FinCEN's BOI reporting entity remains open and is accepting BOI reports, despite the preliminary injunction prohibiting FinCEN from implementing or enforcing the CTA and BOI reporting rule, unquote. So if this is your first time hearing about it, there's this thing called the Corporate Transparency Act. It's passed by Congress, and essentially anyone across the country who has ownership in a private entity like an LLC, an S-Corp, anything like that, the state, of course, already has your information from when the reports are filed to create the entity. Maybe you've got your articles of organization, your annual reports. The state already has this information, but this is essentially creating a federal registry of people who have ownership interests in private companies. Now, this is done through FinCEN, and the premise was this is going to make it easier for us to crack down on money laundering and things like that. A lot of people were really upset about this. They felt like it was an overreach by the federal government, and so, of course, there was lawsuits, and now we have this injunction. So if you have not yet filed your BOI report, you can still choose to do so voluntarily if you wish. The website is still up and running, accepting submissions. However, there is currently no legal requirement to do so. Previously, the deadline was set for the end of this calendar year if your LLC had been formed prior to 2025. But as of right now, there is the injunction, so you do not have to submit the report. I'll keep an eye on this, and if the situation changes, I will let you guys know. All right, so as expected, we're starting to see appeals to the NAR settlement approval start to pour in. This is according to Real Estate News. Just one day after U.S. District Court Judge Stephen Bowe approved the $418 million settlement between home sellers and the National Association of Realtors in the Sitzer-Burnett case, an appeal was filed. Springway LLC and a group of objectors announced the appeal in a November 27th filing, bumping the case up to the U.S. Court of Appeals 8th Circuit. That court is also overseeing an appeal of the Remax, Keller Williams, and Anywhere settlements, which were approved by Judge Bowe in May. Springway was originally the lead plaintiff in the Pennsylvania case, now known as Moriatis. The objectors are also involved in that case, a copycat commission's class action lawsuit filed in December 2023. On December 2nd, 4 more appeals were filed. Monty March, a plaintiff in an early copycat lawsuit targeting the Real Estate Board of New York and a host of brokerage companies, appealed both the NAR settlement and the settlements approved on October 31st in the Gibson case. That include Compass and Redfin. March had filed objections to the settlements prior to their approval. The other appeals filed Monday came from James Mullis, a plaintiff in the Batten homebuyer lawsuit. He previously appealed the May settlements with Remax, Keller Williams, and Anywhere, and he was an objector to the Gibson deals. Like March, he is appealing the NAR settlement and the deals approved by the 9 brokerages in Gibson on October 31st. The filings continue to roll in on December 3rd, with Robert Friedman appealing the November 26th approval of both the NAR and home services settlements, as well as the approved Gibson settlements. Friedman filed his own case targeting Real Estate Board of New York last year, and he also filed objections to the recently approved deals. All of the newly filed appeals will go to the 8th Circuit, unquote. So I know you guys are probably tired of hearing about all these class action lawsuits and settlements and objections and appeals. Believe me, I get it. I'm a little tired myself just talking about these things, but we need to keep an eye on what's going on out there. Keep in mind the NAR settlement put to rest home seller claims, but we still have home buyer lawsuits hanging out there that NAR is going to have to deal with, and now we've got these appeals. I was talking with some folks at the South Carolina Association of Realtors earlier in the week, and it's likely that the appeal process is probably going to be dragged out for like 6 to 12 months. So this issue is not quite over yet. All right, so shifting gears a little bit, Rocket Mortgage has sued HUD, the Department of Housing and Urban Development. According to RIS Media, quote, national mortgage lender Rocket Mortgage, a part of Rocket Companies, filed suit in federal district court December 5th against the U.S. Department of Housing and Urban Development, HUD, to correct conflicts between the government's regulations requiring appraiser independence and its enforcement actions seeking to hold lenders liable for the conduct of independent licensed appraisers. Rocket Mortgage also filed a motion to dismiss the claim the DOJ brought against the company based on the same regulatory conflicts and misapplication of applicable law. It is unreasonable that the DOJ chose to sue Rocket Mortgage for the conduct of an independent appraiser, said Bill Emerson, president of Rocket Companies, in a release. We will not stand idly by while the courts are used as venues to leverage our company's name to publicize the case instead of pursuing justice against those who may have committed wrongdoing. It is notable that in a case about the alleged actions of an independent appraiser that was contracted through an unaffiliated third party, Rocket Mortgage is listed first in the DOJ's filing and is the only company mentioned by name in the headline of the government's press release announcing the DOJ's lawsuit, Emerson added. We have always been guided by the fundamental principle that all home buyers and homeowners should be treated fairly and should have every opportunity to achieve their dream of owning their own home or using the equity in their home to improve their lives. Our long, exemplary track record of fair housing lending speaks for itself. The accusation of discrimination is against the independent appraiser who performed the appraisal, not Rocket Mortgage, the company said. Despite this, Rocket alleges, the DOJ dragged Rocket Mortgage into a lawsuit based on the assertion that the company, quote, had the authority to correct the discriminatory appraisal or cause it to be corrected but failed to do so. This is 100% false, the company claims. Rocket Mortgage had no authority to correct the appraisal as a matter of law, and the claims against the company should be immediately dismissed, unquote. This is an interesting case. So the appraisal independence requirements were put in place way back in October of 2010 in the aftermath of the Great Recession caused by the subprime mortgage meltdown, and this created strict rules for how lenders were supposed to select and communicate with appraisers. There's essentially supposed to be a big firewall between lenders and appraisers so that appraisers never felt pressured to give a certain value to a mortgage, among other things. So in this particular situation, what happened was apparently there was an appraiser who allegedly discriminated against a homeowner and gave them an appraised value that was below market value simply because of their race. Now, in this situation, the government came after not just the appraiser, but Rocket Mortgage, who was the lender on that transaction. Now, if you dig into the article, what you'll find is that in this particular situation, Rocket Mortgage actually gave the homeowner who got the low appraisal during a refinance process, they gave them multiple opportunities to file an official dispute or rebuttal against the appraisal, but the homeowners failed to do so. So I'm not really sure that you can blame Rocket Mortgage for this. I think if an appraiser does something bad, if they are discriminatory in their practices, I think that is on the appraiser, unless you can really, really prove that Rocket Mortgage knew about the discrimination and did nothing about it. But like I said, in this particular case, it looks like Rocket Mortgage did the right thing, and they gave the homeowner the opportunity to dispute the appraisal, but the homeowner chose not to do so. All right, there's an article from Inman that I read this week I found really, really interesting. It's called 3 Wildly Divergent Market Paths in 2024, the Good, the Bad, and the Ugly. Now, I'm going to read a fairly lengthy section of this article for you guys, just because I think it's really fascinating, and it kind of just speaks to how local real estate markets can behave wildly different in different parts of the country. All right, so this is from Inman. Quote, often when a market experiences a major upswing in active inventory, it signals a market slowdown is underway. That's not what's been happening lately in the West Coast high-dollar housing markets. Today, big cities in California and Washington State are experiencing an uncommon cocktail of factors that could signal better days are ahead for the real estate business in one of the most stagnant housing regions in the U.S. Inventory has recovered sharply, even as pending sales have recovered faster than in most places. Nowhere is this more apparent than in San Diego. The greater metro area there has witnessed a 63% rise in inventory year over year, the highest in the nation. Despite this, half of homes in San Diego sell in 34 days or less, compared to 58 days or less nationwide. And while that timeline has been rising, it's been rising slower than the rate seen in other major US cities. This shift in inventory in these cities has also coincided not with falling prices, as one might expect, but with surprisingly stable prices instead. And while a shift this strong might normally result in homes sitting for longer unsold, they remain on the market for less time than in most parts of the country. From a pure active listing standpoint, Florida appears to have much in common with California, but the reality of their trajectories couldn't be more different. Once a hotspot for the pandemic-era housing boom, Florida is undergoing one of the nation's most severe and longest-lasting downturns, with no end yet in sight. Take the greater Miami area for starters. Like some of its counterparts on the West Coast, the Miami market has seen a 57% rise in for-sale inventory over the past year, among the highest in the nation. But half of homes in Miami are sitting on the market for at least 74 days before selling, more than twice as long as in San Diego. The list price per square foot was down 9% year over year in October in half of Miami homes for sale. That's fundamentally unlike the 2% price gains observed nationally in that time, and well below the 1.7% rise that California listings have sustained through a similar inventory upswing. It's not just Miami either. Florida markets, including Tampa, Northport, Fort Myers, Orlando, and Jacksonville, are all roughly in line with this picture to varying degrees. In Florida, new listings have been falling fast, but sales have been falling faster. As a result, homes are sitting for longer and longer on the market, active inventory has ballooned, and prices are falling faster than almost anywhere in the country. Most U.S. housing markets hit bottom about a year ago. In Florida, the downturn is still in full swing. In most parts of the country, today's business climate could not be more different from the early pandemic home buying frenzy. But in pockets of the Northeast and Midwest, some of the key dynamics that characterize the pandemic boom have been upheld, particularly tight inventory, a seller-friendly imbalance, and relatively stable home transaction levels. Nowhere in the country is this more apparent than in the major population centers of Connecticut. The state as a whole remains extremely supply constrained, with active listings in October that were 57% below their levels from early 2020. Nationwide inventory had actually risen by 3% over the same period. Connecticut in October saw 30% fewer new listings come online than it did in February of 2020. Nationwide, new listings were only down by 12% in that time. Even amid this pronounced regional housing shortage, and despite an unfriendly rate environment in a relatively expensive region of the country, Connecticut has seen relatively high transaction levels. The result, a greatly imbalanced environment in which buyers outnumber sellers and prices continue to surge. In other words, brokers and agents are still living in an environment much like the rest of the country experienced during the pandemic boom, unquote. All right, I don't know about you guys, but I found this super interesting. We always say that real estate is hyperlocal, and that is very true. However, there is still tremendous value in keeping an eye on the nationwide numbers, whether it's pendings, sales, inventory levels, but the real value comes in comparing and contrasting what's going on in your local market against the backdrop, against the context of the broader market nationwide. So for example, if you live in a part of the country where your local real estate market is performing really well relative to the nationwide numbers, you should be drawing attention to that fact in your marketing. So whether it's social media, email newsletters, phone calls that you have with your database during lead follow-up, make sure to draw attention to the fact of your local numbers against the context of the nationwide numbers. All right, y'all, that's a wrap for today. Just a reminder, you can find the show notes at realestatebackstage.com/episode 8, and I'll see you here next week with another behind-the-scenes look at the real estate industry here on Real Estate Backstage.